We are in a housing crisis, a brand new housing bubble fueled by the rich countrywide. Real estate, new homes, city development are the hot topics within communities. I'm sure many of you are at the home buying age, thinking, am I ever going to be able to afford a home? Don't worry, I asked myself the same question, even with the recent bull market crypto gains. But the answer to me has recently become clear, and one Bitcoin is going to equal one home. Confused? Let me try advising your eyes to clear because it's time for Chico Crypto.
Fed Chairman Alan Greenspan assured everyone that national bubbles in real estate simply do not happen.
Housing bubble? Well, a great example of this is right in my backyard, the city where this content is shot, Chico, California. Now, I'm sure for many of you, when you hear California, you think big city, high housing prices anyways, but not in far north California where Chico sits. Chico is an agricultural community and college town filled with trees everywhere, not a large city by no means. But this year, it's like Chico is right next to the frickin' Bay Area.
I'm from the Bay.
Tell me when to go. But that is false. Chico is 2.5 to 3 hours away on a good day, 5 to 6 hours away if you hit the Bay Area traffic. There is no bay breeze that reaches Chico. It gets blistering hot here in the summers. I'm talking 115 degrees and cold for California, dropping to freezing temperatures during the winter. Chico is not prime California geographical real estate, yet over the past year and a half it's growing like it is. November of 2019, the average home sale price in Chico was about $365,000. As of April 2021, the average sale price was $460,000. Let me explain this, because I live in Chico. The average home price in Chico, California should not be close to $500,000. The average per capita income of a person in Chico is just above $30,000 per year. The average in the state of California is $37,000, and the average nationwide is $34,000. Chico, California is on the low end of wealth, far below the California average and even a good chunk below the national. The average person in Chico cannot afford the average house. Even if they put every single lick of that income, a single person, that entire $30K, assuming they weren't taxed any and the home loan had zero interest, they could pay off the loan in Chico in under 15 years, and that is throwing every single dime at it. With the reality of situations, people have to live, thus they can't throw 100% of their income at homes and taxes and interest. The average single person in Chico couldn't afford the average home in 30, over 40, 50 years even. So who is buying up all these homes? Well, a Chico-based introduction to this story tells the entire tale nationwide. We are in the midst of the nastiest housing bubble America has ever seen. Those who can't afford a home are once again being given homes, like in 2008. Millennials this time are being targeted as they are in their prime home buying years. Yeah, millennials, according to the latest data, are the #1 age group for buying homes in the United States, even though their wages are not at the levels to afford these $500,000 homes. They come in to buy armed with a smartphone, a job, and a $10,000 down payment, and that's it. And they still get the house. This was even happening before the global shutdown and viral panic. The federal government had exposed itself to risky housing debt like never before. That article was written in October of 2019. You should know our government is eating a ton of the costs, as many of these risky loans should have already gone kaput in 2020. Mortgage forbearance and foreclosure protections, they were expanded in February of this year by the Bidester. From the statement, 1 in 5 renters is behind on their rent, and over 10 million Americans are behind on mortgages. So let's just expand these programs out another year to June of 2021. Well, that number of people behind is only going to grow and grow. 10 million behind will become more and more, most likely 20 to 30 million by next June, because that trend already started. Bidester statement, February 16th, 2021, just over 10 million behind on their mortgages. March 1st, 2021, the Consumer Protection Financial Bureau report states it's now grown to over 11 million. So obvious it's a growing problem, but that's not stopping new loans from being created, which can be seen in the April 2021 Housing Trends Report. Nationally, the typical home just spent 43 days on the market. In April of 2020, that number was 63. Homes are going quicker than realtors can list them. No wonder every future Karen from your high school is selling real estate and killing it. The reason they are killing it, though, in today's market is the perfect, ripe, but devastating to our future bubble conditions. You now have permanent capital competing with a young couple trying to buy a house. What do I mean permanent capital versus new home buyers and ripe bubble conditions? Well, the conditions are a very fragile economy with growing mortgage delinquencies. You have a limited housing supply. The national inventory of active listings declined by over 50% compared with the same time last year. And the low rates, reaching rock bottom leverage for the average 30-year fixed. Those low mortgage rates sound good to the average person, yeah, if your home was 100K to 200K, but not so good when your loan is $500,000 to $1 million. But some of those average people are still jumping into the loans of that size. Stupid millennials.
Join me in sponsoring a millennial today and help us.
Help us.
Help us. Help us live the lives we portray on Instagram.
But those rates do look tasty to those with the fat pockets. The Wall Street Journal put out an article last month titled, "If you sell a house these days, the buyer might be a pension fund." Yield-chasing investors are snapping up single-family homes, competing with ordinary Americans and driving up prices. The hedge funds, the pension funds, Wall Street, they have come for suburban America in many forms. From the Wall Street Journal article, it says, in many of the nation's top markets, about 1 in every 5 houses sold, it's bought by someone who never moves in. The yield chasers, they're buying to flip. They're buying in hopes of growing their wealth, having a nice resale down the line, which is being reinforced externally like never before. Besides crypto that is traded back and forth, lumber for building houses is traded too. Lumber futures have been exploding, reaching near 1,600 and are showing no signs of slowing down. So hot that even the crypto exchange FTX decided to launch the wood-based futures on their exchange just last week. Now, isn't that ironic? Housing materials to the roof, the prices to the roof. A bubble is being created and drove by the wealthy. It's the institutionalization of real estate, and it's happening before our eyes. Right before Chico, California's eyes too. To solve the housing crisis, the city leaders here have put forward the North Chico Village Vision Plan to hopefully alleviate the community's housing needs. It's an infrastructure plan, great, but scrolling down to who is working on the project, it says Butte County has hired SWA Group. Looking at their recent work, that is not Chico-like. That is big city, Bay Area type architecture. They are building not for Chico, but for the hope that the city will move up here. And that is getting common across suburban areas across America, small towns and cities, and even starting to grasp your small mom and pop shop town. Chico is not alone. So what's the reality of this situation today? Well, homes in America are majority owned by the boomers and being sold at ridiculously inflated prices to two sets of people. Number one, young dumb millennials, usually couples, and number two, yield hunting psychos. No sane person is buying a home in these markets. They cannot afford it. In the communities across America, they just keep building in hopes that this insanity will continue. continue. Sane people are not buying homes. They are buying crypto, in my opinion. Do I look crazy? I'm not buying a home right now. I could buy my dream home if I was insane and sold my entire stack of Bitcoins. But I'm doing what they say is called hodling out until one Bitcoin buys one house in my area, which as of right now is around 400K. The BTC, the limited supply of 21 million, make that type of worth inevitable, in my opinion. Shoot, at 60K, one BTC already buys a home in some parts of America. That doesn't mean I don't think we are in an everything bubble. We are. Everything is in a bubble, Bitcoin included. And when everything pops, Bitcoin does too. So that doesn't mean my shat coins couldn't be reinvested into a house here soon. But that rebound and the next bull run is when it's highly possible. One BTC equals a $500,000 house. And that's when I'll sell one. Cheers. I'll see you next time.